All right. Hello, everyone. How we doing tonight? It is finally done. New computer, full setup. Definitely gonna be messing around with some stuff. Like, wait, let me test this. Like, see that? I don't want that to happen. I don't want my scroll wheel to be so loud, but definitely a lot of messing around will be needed. Um, but outside of that, hopefully it sounds better. Hopefully, well, it should look the same. Um, so thankfully we have that going for us. Let me make sure that is fine. Yes, everything is fine. All right, so let's talk about today, right? First PA review of the week. Why is that? Well, very simple. We didn't have any news beforehand, and I don't want to be doing PA reviews on days with no news. Now, outside of that, we had a very, very nice trading day, as we can see from this Thursday candle. And the reason I say this is because it was easily predictable. Now, when I say easily predictable, what do I mean? Well, the previous day retraced into a discount. Once again, these are the drawings from the weekly outlook, and we were talking about fractalizing ranges. We returned to a discount. We returned into that inversion fair value gap. Once again, once we're reversing this range, we don't have to retrace to a discount of this whole range, which is why I like to fractalize ranges like this. And of course, as you can see, we had our move to the upside that we were anticipating. Also had a part of that move on Monday. Tuesday induced all-time highs here, and now we were heading right there today, but of course we could not complete it, so it will go into tomorrow. Um, Overall, this was my higher time frame point of interest, which means that anywhere within this, I was looking to long, and if we're gonna get into it, anywhere within this fair value gap is as well, of course, including the volume imbalance, is as well where I was going to be looking for a long. Now, of course, ES respected that fair value gap fully. On NASDAQ, we did open below it, but we aggressively traded back to it without issue. Let's go in replay mode here, and let's look at that. So we don't need the big text anymore because we are back to our normal size, I guess. I am going to remove this higher time frame point of interest, but I did want to showcase it to you guys. As you can see, this is the 9:30 candle. We did open within it. Now, of course, whenever we have news at 10 a.m. like today, right? I believe it was 10 a.m. Let me double check to make sure which news. Yeah, so we had University of Michigan consumer sentiment. We had 9:45 news as well with PMI. Whenever that happens, I need to look for SMT for me to even consider taking a trade before said news. Now, of course, if we look at the ranges specifically, let me actually remove the candle ranges for now since we don't need it. And let's actually just remove SMT for now because that's for later. If we look purely at the sessions, we can see we have a clear London framework. Now, of course, when we start off right here, you would not expect or anticipate, I guess is the best way to put it, that this would be a fake move. You would anticipate that this is your current low of day, right? This is your high probability low of day. But after London movement, right, and overnight trading, which for me is 5 a.m. to 9:30 a.m. This is what I like to call the overnight session. We can now see that it was clear consolidation in this area. Then manipulating below Asia's low, right, taking the current low of day at that time was a very nice move alongside with the SMT that move formed, right? We can clearly see right here the SMT that the move formed. Give me a second, guys. I'm lagging because I have something open in the background. Nice. This is a lot more smooth, I guess, is the best way of putting it. And as we can see, after this SMT formed, right, you can now trust this as a current low of day, as a high probability low of day. Then 9:30 opens, we see a clear expansion and a continuation coming right after 10 a.m. opens right here, retracing into this fair value gap midnight open, and then continuing said expansion. ES was a little more bullish, but we had everything to align, especially with the London framework on NASDAQ to look for longs. What does that mean? Well, it means that right at 9:30, all I am looking for is longs. Now, why do I say 9:30? And I will adjust this because on my chart, it is 9:25 to 9:30. Now, I don't like to do this to 11:30, sorry. I don't like to do this whenever I am looking at reviews, right? Because it just shows you too much information that you very rarely need. But on a day like today, we actually had the breaker block formed just before 9:30, but the entry came at 9:31, which would have given you a beautiful entry. Now you might ask, why are you trading here, right? Why are you not waiting? Well, because we had SMT. Let me find it again. Well, we did, of course, have SMT right at these lows. We had SMT at Asia lows right here, but I believe we had some more SMT. Oh yeah, so this swing point right here, with ES not taking said swing point, well, NASDAQ did, right? Barely a difference, well, actually equal levels. So in this case, you treat ES as if it had mitigated it. But there was a lot of SMT right here behind it, which means our Judah swing has already been completed. So I was very confident in trading pre-news in this case, even if we had a 9:45 news. Now, the only thing that I will do whenever I take positions like these is I want to take profit before the news. So even if my position is barely above break even, well, in this case, I won't take profit. I'll go break even, right? So if my position is above or equal to 1.7 R in realized profit, then I will take profit and go break even. And if it's below that point, right, below that profit threshold, then I'll just go break even. So that worst case scenario, when the news hit, I get broken even, maybe a little slippage. And best case scenario, well, I already took profits, mitigated my risk, and then it keeps going at the time of the news. So in this case, we would have seen a very nice 931 entry. It's actually kind of funny because if you look at the 3PD array stop loss rule, right, our mechanical way of establishing a stop loss, you'll see fair value gap, order block, and then this order block. So you'd put it at this swing low, and you can see it barely did not reach this level. I think it was 2 handles, yeah, by 2 points that it did not reach the stop loss. I'm going to be honest with you guys, I didn't even have time to place my stop loss before my position reached this point, but definitely a very, very nice timing, which would have allowed for plenty of risk to reward in this case, as we can see, offering over 6.7 R just to London high, which would have been the only level I look for. I would not have looked to partial at any other point. This is your low-hanging fruit level that you can look to trade to. Now, of course, afterwards, we have a bunch of relative equal highs, especially on the 15 minutes. Those swing points appear very nice. So we had plenty of objective, which we did not reach any higher time frame objective. So for me, it's all about managing a position from that point. Of course, you entered here and then you're just managing your trade throughout the day. You can definitely take out the full position, the remainder of the position, as soon as the lunch raid happens, right? So as soon as lunch high is taken in this area and we have all of these nice levels to look to target, you can definitely justify a short here. As we can see, it definitely did not work out, but you could justify a short, which means that taking out your long would have been useful. Now, I'm not going to discuss on this short because there is no reason you should be looking to short here. If I'm going to be looking for a framework at any point near the 1015, I'll just prefer waiting for 1030 when the opening range is established, and then I can look for an opening range framework, whether that's breakout move or a full reversal move from that framework, of course, depending on the higher time frame bias. For me, though, it was pretty clear today. I was looking for longs, right? And if you're confused as to why, and my explanation at the beginning of this call was not enough, I guess is how I can put it, definitely go look at our weekly outlook. We went in depth about why we'd be looking for longs today. Now, unfortunately, as we can see here, we did have another entry, which would have been, let's just say, a hard one, right? If you're entering on this continuation, I do believe it is a valid trade. It's a little bit less pretty, I guess, than this one, right? A little worse, but not too worst for me not to take it. If you're looking for the specific terms I would use in this case, is very simple. This is A, it's not an A plus setup. If we look at 3PD arrays, you can see fair value gap, and inversion fair value gap, which brings your stop right here. Now, of course, if we look and extend that pass, you'll notice that it did great. But I'm going to be honest with you guys, I always say this, whenever it consolidates at my entry, right? So all of this consolidation, I would have at least noticed at this point, right? Let's just call it 1110. Whenever it consolidates on my entry, I like to go break even. which means I would have gotten broken even here, possibly re-entered at this inversion fair value gap with this breaker block, which would have stopped me out, right, at this point, because that is the maximum point of my stop, and then had no other possible re-entries because I don't look for trades past 11:30. So in this case, you really had to take that first trade, or perhaps you were in this trade and you got broken even, right? I mean, we did reach 2R at this point, definitely not before getting broken even, but if we look specifically at 1.7, which is our minimal threshold for take profit, you would have seen price almost reach it, return to break even, and then fully reach that point. So especially after seeing this PNL change, right? Just think about it. Let's say you risked $1,000. Here you're up like 1,500, and then you went back to zero. Now you're pissed at yourself, and then you go back to that 1,600, 1,500. I would be very happy to entirely close my position at this point, if I'm being honest. Just count it as luck, or at least take a partial and then go break even, which once again would have stopped you out at break even. Let's at least move it to that point. As per any other trades, right, PM longs is not something I would be considering. Why is that? Well, because I like to trade the lunch rate, and if I'm going to be looking for PM continuation, I need lunch to be a retracement. And as we can see from the lunch session here, we didn't have a retracement, right? I would have needed lunch. Let's say lunch started, where is noon? Right here. If lunch just went and got those levels and then we were trading right here, even if there was not a lunch rate, I could wait for the 2 p.m. open and then take an open to low and then take that long. But I can't trade that because we didn't have that happen. We didn't have lunch as a retracement. Now, the other option, of course, is going to be the lunch rate framework. As I said, you could definitely justify taking a retracement here. Let's look at it. Of course, we can definitely see that it is unsuccessful, right? But we can still have a look at it. Oh, actually, the next candle over inversed it. Now, if you're entering on this inversion fair value gap, you then have the fair value gap above and the order block. So your stop would be all the way up here. So pretty wide stop, but does offer plenty of risk to reward to your objective of lunch low. Now, of course, this was unsuccessful. And if you take the next setup, right, because it doesn't always work on the first try. So why not consider taking an additional trade, right? Well, you have fair value gap here. Is this inversion fair value gap invalidated? It closed below and then closed back above, so we can't consider it. So fair value gap, order block, no matter. We're still looking at the same thing. We're looking at a stop loss here. And then, I mean, I can keep going, but this one is a clear loss here until this one would be the only one that would have provided you with some chance of making profits, right? With that 350 large candle down. And if we look fair value gap, inversion fair value gap, order block, actually, you would have gotten stopped out on this one too with a very tight 3PD array stop loss here. So overall, PM session was quite unsuccessful, no matter if you had a long or short bias, at least with our model. The truth is, if you made money on this first move, you would have never even considered taking any PM trades. Magic, no worries, but why not short after London is taken? Well, for me, I have no reason to justify this move at all. Why? Because of my bias. Now, of course, if I look at these relative equal lows here, I'm like, oh, this is a clear objectives. But my bias, for lack of a better term, is super bullish for the day. So I'm not going to consider taking a short here that has already retraced to a discount of my range, right? If I took the short here, I would basically close out that trade once we reach our first discount in efficiency, because from that point on, we don't have another reason to keep going. Now, of course, if we did not reach said first discount, well, it just doesn't offer enough risk to reward, right? I'll show you the setup, right? If you're entering here, well, actually, that is not where you would enter. Is this an inversion fair value gap? No. So actually, this does not offer you an entry until here. If you're entering here, and let's just say you have inversion fair, sorry, not inversion. Sorry, I kept saying that. But this is a regular fair value gap. This inversion is still valid, right? Because you're entering as soon as this bar trades into here, not after it closes, and then order block. So actually, you would have gotten stopped out a minute after your entry. But if we look at the first discount in efficiency, which is this order block right here, Well, I mean, it does offer 1.9. I mean, with a stop loss like that in a range like this, I mean, it does offer enough risk to reward. But I mean, you're looking at this, basically, you're looking at entering on this candle right here at 1023. You just swept this liquidity, and now you're displacing back above into a fair value gap we've already mitigated. This is just me understanding that this is not a good entry, right? Overall, right? It is not a, sorry, not a good entry, not a good move overall, because I have no confirmations. So we can clearly see that we don't want to go down currently. So it might be a reason of getting to opening range high and then finding a short, which of course we didn't have a setup here. But this could be something that I could look at, right? And what I said at the beginning of this call is that I don't have a reason to justify here. I'd much rather, sorry, wait for the opening range to be formed, and then wait for opening range high, take a reversal play or a breakout play. I did miss this also, but if we look at ES, we did have a very nice entry here for a long. And this one would not have broken you even. Well, let's look at the stop loss, right? Inversion, fair value gap, order block. Yeah. So see, taking that long on ES would have been the best. Oh, well, it would have also looked to stop you out. Yeah, and with this consolidation, same thing as NASDAQ, there is no way I'm not break even after all of this consolidation here. And I mean, pretty much being up, yeah, still the same thing, right? My 1.7 right here. This is definitely a break even trade in my book. Hopefully that helps you out, Magic. But for me, there's just no reason to be taking these trades. And of course, as we discussed at PM session, quite unprofitable, I guess is the best way to put it. It sucks days where your bias was so clear, right? It was so precise, but you had a hard time finding a setup for it, right? If you missed that 931, it's just one of those days where you had to take the first entry. And I mean, it was a hard one to take just overall because of how quick it was, but it was also a hard one to take because it was before the news. Now, of course, we didn't have any SMT right at 930. So there's no reason you should be mad at missing this trade. That's the truth. I took it because I saw it, right? I waited for the 931 candle to develop a little bit, basically 40 seconds. And when I saw the rejection, that was my Judas swing. That was my entry in the unicorn. All right, talking about this candle right here. And past this point, I had no other thing to do for the day except take profit, break even, hold. Then I trailed my stop to this level after we traded back down into here. And once we expanded away, so during lunch pretty much, I put my stop to the 10 a.m. open here. Now PM, honestly, I just held it through and closed at 4. Nothing much happened from that point on, but we can see it did offer plenty of risk to reward from that initial trade. It's those home runs that just happened right at 9:30, and then we see a trending regular trading hours, right? But it doesn't mean you have to catch every single one of them, right? For a lot of people, I'm sure today was a harder day where they had 2 or 3 losses and they just decided to call it a day. Well, that's what happens when you miss that first one, and it happens to me often. Yeah, those are tough days often because you miss a first trade. Yeah, definitely. Because afterwards, let's be honest, we're human, right? You want to keep going. You want to keep trading. Why? Because you just missed a trade. You're just like, oh, there might be another opportunity. I'm not saying you're FOMOing into trades, right? And taking bad trades. But you want to be there because you just saw a successful opportunity and you're like, oh, damn, I missed that. Let me try and find another one. But oftentimes, when those trades happen so well, you don't get another very nice setup. Let's just say it like that. I used to fully close out my charts whenever I missed an early morning trade because that would get me all tilted. Now I'm a little bit better. I don't need to close my charts, but it's still, it's going to be a max losing day for me no matter what, unless I make money on other trades. But whenever it's that first setup that I missed, it's usually it's either a max losing day or a small winning day because I caught a good move after catching 1 or 2 losses. Hopefully that helps you guys out. But I am starting to create, what's it called? A database of Rise model trades. I want to create just a fully complete trade database of every possible setup that we've seen, I don't know, in the last 3 to 4 years. That would be my goal. But it's gonna take some time for sure. Yeah, that would be awesome. Definitely, right? I don't know if you were there, Magic, but I did say it. I am planning a lot of different things going into, well, to go to for 2026. I was looking for my words there. Sorry about that, guys. Um, but I am planning a lot of stuff for 2026. Definitely going to be a longer timeline than what we're used to seeing, but got a lot of stuff coming. So hopefully you guys will enjoy all of that. So stay tuned for that for sure. Do we have any questions? Any questions, Magic? Riding solo tonight before we call it a night. I definitely should give people reminders whenever we don't have much things going early on in the week. All right, well, on that note, have a great night, guys. Have a good night, Magic. And I'll see you guys tomorrow for another price action review, which will be at 5 p.m. Market close. Have a good one, guys.